Welcome to What Matters Daily. Palantir PLTR stock has surged over 600% in search traffic, dominating all financial headlines. This is not a drill. Is this massive spike the start of a huge AI bull run? Or purely speculative market hype that will soon disappear? Today, we give you the facts, debunk the speculation, and tell you where your real risk lies. Palantir, known for its powerful government-focused AI and data analytics, is facing a pivotal moment tied to a major strategic shift. The primary driver is twofold. First, massive confidential government contracts provide stable, recurring revenue for PLTR. This defense stability is key to its fundamental valuation and long-term security. Second, Palantir's commercial platform, Foundry, is aggressively moving into the enterprise data management space. This pivot to commercial clients is crucial. The market is betting on the company successfully moving beyond its military origins to secure a larger, more traditional commercial footprint. This success determines its future valuation ceiling. Analysts note that Palantir's AI tools are becoming crucial in corporate data management globally, especially for logistics and supply chain optimization. The question remains, is this phenomenal growth sustainable? Or is the stock currently overheated due to purely speculative trading? Understanding the long-term fundamentals of the business is crucial. Palantir remains one of the most controversial high-growth stocks. The bulls optimists view it as the undisputed future of enterprise AI. They believe the recurring government income provides an untouchable stability and a solid financial floor from which to launch commercial growth globally. The current 600% spike in search interest validates their thesis of accelerating public awareness. Furthermore, bulls often predict high double-digit growth rates for the next 5 years, based on the assumption that the enterprise AI market will expand dramatically and Palantir will capture the dominant market share. They point to the specialized nature of Palantir's data handling as its ultimate competitive advantage against broader tech firms. Conversely, the bears pessimists are deeply concerned about the company's extremely high valuation multiples relative to its current, comparatively modest earnings. This valuation concern alone makes the stock incredibly vulnerable to any sudden market corrections or negative news releases from competitors. The bears also point to a heavy, dangerous reliance on securing only a few key, massive government deals to sustain their revenue pipeline. This dependency introduces significant quarter-to-quarter volatility. The potential loss of even a single major contract could trigger a substantial, immediate sell-off and a steep price drop. Key risk factors for Palantir include serious regulatory and public privacy concerns surrounding their powerful, yet intrusive, data collection tools, especially when deployed in commercial sectors. These issues could invite future government scrutiny and potentially limit market adoption in Europe and other privacy-focused regions. Furthermore, the company faces fierce, multi-billion-dollar competition from established tech giants, Microsoft, with its pervasive Azure as services, and Google, with the expansive Gemini ecosystem, are aggressively pursuing the exact same lucrative enterprise AI market space with vast resources. This means Palantir must constantly innovate and outperform giants that possess almost limitless capital and global reach. Their primary advantage lies only in specialization and first-mover status in the government sector, but that may not be enough against the sheer scale and marketing power of their competitors. To mitigate the investment risk, monitor the next earnings report closely for definite signs of sustained, profitable commercial growth, not just fluctuations in government revenue. That commercial growth is the ultimate and most important metric for Palantir's long-term success. And stock price stability. We emphasize that Palantir is a high-risk, speculative AI play, driven more by massive contract announcements and high volatility than by slow, steady revenue growth. This makes it suitable only for investors with a high risk tolerance and a long-term outlook, ready to weather sharp swings in price. Before investing, you must conduct your own comprehensive due diligence. This includes analyzing the company's balance sheet, its cash flow situation, and the details of its commercial client adoption rates over the past 4 quarters. Don't rely solely on media hype. Our analysis indicates that the near-term volatility will continue. Therefore, timing the market is extremely difficult. A disciplined approach using dollar-cost averaging DC is often recommended for such speculative growth stocks to minimize entry risk. The market has been keenly awaiting a formal update regarding Palantir's involvement in a large and confirmed European defense project. This potential contract, if materialized, could single-handedly elevate their quarterly revenue guidance and lead to a significant, sustained rally, justifying some of the current premium valuation. We will reveal the critical date for the next major contract update and detailed analysis. This information is often buried deep in filings or analyst reports, but it is the key to understanding the stock's near-term catalysts. Investors must monitor specific regulatory announcements concerning data use policy, as these can trigger both positive and negative stock movements. So, should you rush to buy PLTR now? This content is not financial advice. Palantir is a high volatility, speculative play. Tap subscribe to ensure you always get the facts first and protect your portfolio from hype. We focus on data that matters daily.